Stock futures opened higher Tuesday evening after an everything is awesome tech rally during the regular day trading. Futures contracts on the Nasdaq opened in the green, while earlier in the day, the Nasdaq closed higher by more than 3%, posting its best day since March. Keep in mind that roughly 66% of the Nasdaq is in a bear market, with losses over 20%, while 35% of the Nasdaq is down over 50%. The S&P 500 and the Dow also advanced strongly, rising more than 2% and 1.4% during the day. Not surprisingly, Treasury yields also climbed to just below 1.5%. Rather than focusing on Omicron, the market wants to focus on the hope of a stronger U.S. economy next year on the back of reopening. In other words, on the back of all that consumer cash. So what did the charts show? Let's take a look. Today we're going to take a look at two charts, beginning here with the 6-month daily on the volatility index. And using stockcharts.com, the symbol in the upper left, as you can see, is $VIX. And we've had a pretty good run all the way up here above 34, and it's coming back. Kind of what I expected to see is a little bit of a pullback. Now, looking here in the bottom, you can see that the MAC, the fast line, still has a pretty good separation between the fast line in black and the slow line in red, which means things can still be volatile. Going back here, where we had this rise at this level here on the MAC, up here in the price chart, it did come down here, calming down, but it bounced off of the slow line for the most part, and this bounced off of that 50 EMA and on up here before it finally decided to settle on down here in late October and early November. So, being that we still have this separation between the fast line and the slow line, a pullback but a reflection back on up, perhaps maybe up to the 28 level or so, is a possibility. I think the overall probability is that whether we have a bounce, reflection or not, things will be calming down here in the next few weeks. You can see that up here with the RSI, with the move coming on down fairly strongly. We're at 50.10, and I think it's going to continue coming down and calm down, as well as I think the price chart and the MAC will sooner or later. So now let's go to our charts. And now moving to the 6-month daily chart on the spiders, the SPY, and as you can see up here, the close on Tuesday was 468.28. Now this move here was very sharp, at least at the bottom. That recovery was very quick, and we had a very fast and relatively decent rise up to this current level, and that's what spooks me a little bit. This is a little too quick and a little bit too far in the move. Going back to this time frame, September, October, the example that we see here is that on the downside, we came to this point. We did have a fairly decent and sharp recovery. It did tangle with the 50 and 20 EMA and got reflected back down here, gathered a bit more strength, headed back up, same thing, and then a little bit of a reflection and retracement down here before it finally had enough strength to continue on its way. So for here, being how sharp and how fast that recovery was and how far it went, I'm thinking that there's still perhaps a bit of volatility that we can expect. Move down here into volume. Things are calming down a little bit there. That's fine, but not much else we can see. Here in the MAC, here's what I'm talking about is we still have a pretty decent separation between the fast line and the slow line, although we do have strength in that we're above that zero line. I do think that that separation leaves some room for volatility here in the next week or so. As an example, back here, this retracement or move down to this point here. It made an attempt to cross up and through that slow line, got reflected back down here. So that separation, even at this point, was closing in. That's still a little bit more narrow than we have here. Now, tomorrow we can have a continuing day up, but I still say that that separation leaves the possibility for volatility. Here into the histogram, you can also see all the way from that bottom, moving on up, that would be very, very strong. Here, with that September to October time frame, you could see we had multiple attempts to make it on through. I don't think this is going to be so clean and easy. However, the price rate of change is saying otherwise. And along with that is the RSI, which moved up and above that 50-year midline, and we're at a 59.78 level. That's saying that the stochastic and the Williams don't want to slow down. So there is the possibility that we can continue on up. I would be a bit surprised. I think the probability is just barely over 50% that we're going to have some more volatility, but one never knows. So I would have a half expectation of some volatility, perhaps some retracement, and then I think it'll have enough strength to make the next step up. And for today, that's ChewDog Charts. Thank you.